Welcome to my channel. I'm Dr. Romano. In today's video, we are going to be talking about what is the future of hedge funds and what do I predict that will happen within the next 5 years. Before we continue the video, please remember to do thumbs up if you want to say thank you, Anthony. Thank you so much. Now let's first talk about when hedge funds became very popular, and after the year 2000, hedge funds started to grow enormously because those people in investment banking in the 80s and 90s, they were being laid off one after another because of all the mergers that were happening. And so it was apparent that people in their 40s back then, it was going to be really hard to find a job in finance. They took their experience and they continued to trade, but for themselves, and they traded other people's capital instead of working on the trading floor, working with the investment bank's capital. So ever since then, hedge funds have been growing, and we did have some bad publicity like Bernie Madoff, and from there it continued to grow, and somehow certain hedge funds seem to do very well. So the other question is, by the year 2008-2009, we did see that the hedge fund community did very well compared to the investment bank traders. And so it was apparent that there was a change that was going to happen. And that change did happen. The change was that investment banks were allowed to invest in hedge funds. Because hedge funds are so much more efficient at managing capital and risk, they just perform better when the company is very small. Because of the investment banking industry opening up the doorway and allowing the public to see that if they could invest in hedge funds, then why can't the basic public invest in hedge funds? And so that led the doorway to expand the hedge fund industry even more. And as today, where it is, finally, it is 2022 and it is October. The reason why I'm making the video is because I made a video on hedge funds, why you should invest in hedge funds. But if you watch the video, you'll know the reason. Today, we have the Funds of Funds industry that's been growing for the past 5 years. And 5 years ago, nobody wanted to hear a Funds of Funds. They didn't want to hear about it. They were so negative about it. But unfortunately, the typical investor, the typical portfolio analyst, they're not capable of constructing a portfolio of hedge funds. It's a different type of risk, and as well as depending on what basket of hedge funds that you put into your portfolio, they could all do very well, but when you mix all those returns together, it will water down the returns unless it's done in a certain way. And that is the golden ratio, the golden method. Whoever understands that will always produce a great return for their investment clients. And so from today, now it's people want to invest in funds of funds because they're not aware of what is really, they really don't understand the risks associated with hedge funds. And so if you invest in a funds of funds that has a basket of hedge funds, then of course you reduce your risk substantially, and they will always produce a beautiful return. And so my prediction is that once the SEC allows the typical person, not with millions of dollars, anyone with $100,000 in savings, they should be allowed to invest in funds of funds. And if they're allowed to take part in that, think about how many funds of funds will be established, number one, and how many more hedge funds will be established. So if the top 10 hedge fund managers take all their traders and allow them to have their own hedge fund with their own staff, with their own management, them managing the company, the actual trader, and keeping the company small, under 500 million in AUM. Think about how many traders we will have trading on the market with them being their own boss, and them taking the responsibility in their own hands and tweaking and improving their investment strategy. The markets will become so stable that we will never again, for at least 30 years, have these situations where we have collapses which devastate the banking industry. And so that will be eliminated to a high degree. Because as you could see today, the hedge funds have been doing pretty well compared to the investment banks. And so what happened at the investment bank level, or that industry, is because they merged together so quickly, and prior to that they consolidated with the savings and loans, you had a handful of companies trading capital. And that creates a very volatile market. Whereas today, we see the stock market going down since January 1st of 2020. And it looks beautiful, and that's the way it should look when the value of investments are reanalyzed. And that's what's happening now. Globally, there's a major change that's happening. We have a change in our way we make money for the majority, like the real estate sector. That's not going to be such a big sector anymore. It's going to be manufacturing, and each country taking back their manufacturing for the next 25 to 27 years. And once they do that, you're going to see wealth change again. And a lot more wealth is going to be created. Because in the real estate sector, only certain people actually created wealth. And a lot of people didn't, and they didn't take part in that, unfortunately. And so when you have factories and thousands of people working and contributing to a society, the wealth is distributed between all these people. And you have like the 1950s created again. And then by the 1970s, it was apparent that if they wanted to grow any more, they had to start selling products outside the country. But a lot of things changed after that. And this is my take on why I feel the SEC needs to change the law on who can invest in hedge funds. I understand that maybe the typical person that doesn't have enough wealth, they still should have that restriction. They should not be restricted to invest in funds of funds. By reducing your risk to 7 to 10 hedge funds in a portfolio, it becomes apparent that you're less likely to lose a lot of money. Compared to if you do have a couple $100,000, you're not really aware, you really don't have the understanding on which hedge fund to invest in. So this is where things become really scary, because if you do qualify to invest in a hedge fund, you're going to have to deal with a minimum investment, which could be a 500,000, a million, a couple of million, 200,000. It just depends the company and how they're structured. And so the public doesn't understand all this, and that's why I feel that the restrictions should still be on hedge funds particularly, but for the funds of funds business, meaning a funds of hedge funds is a portfolio of hedge funds, the public should be allowed to invest in them. Because if they're able to invest in them, they wouldn't lose so much money compared to the investment banks. 2008 and 2009, they would not have lost so much money if everything was so diversified. And this is another reason why I focused my PhD on hedge fund selection. Because I knew eventually the hedge fund industry was going to grow to what it is today. You have so many more hedge funds trading and so many more people taking back the control into their own life instead of being an employee at a company. I want to thank you so much for watching my video. Please remember, if you want to say thank you, do thumbs up. It's right there. And if you want to subscribe to my channel, please do so. So this way you get my future videos. Thank you so much.